Something is happening in the silver market right now that hasn't occurred in over 150 years. And I'm not talking about price movements. I'm talking about something far more significant. A pattern that historians call the crime of 1873 is repeating itself. But this time, it's not happening in Washington. It's happening in Beijing. On December 24, 2025, silver hit $72.36 per ounce. That is up over 140% for the year. Gold crossed $4,500, hitting fresh all-time highs. Both metals are experiencing their strongest annual gains since 1979. This isn't normal market behavior. This is something else entirely. But here is what nobody is talking about. Starting January 1st, 2026, China is implementing strict silver export restrictions. They are requiring government licenses for any company wanting to ship silver overseas. Only large state-approved firms producing at least 80 tons annually will qualify. Smaller exporters will be completely cut out of the global market. Why does this matter so much? Because China controls approximately 60 to 70% of global silver supply flow. They refine the majority of the world's silver. They produce over 80% of the world's solar panels, which consume massive amounts of silver paste. They manufacture the electronics that power modern civilization, and now they are closing the tap on exports. This is the 1873 pattern. In 1873, the United States passed the Coinage Act that demonetized silver. It was called the Crime of 1873 because it happened quietly, buried in technical legislation. Most people didn't realize what had occurred until miners showed up at the mints with their silver and were turned away. The result was catastrophic, a financial panic that triggered the first Great Depression, a period lasting 6 years that bankrupted 18,000 businesses. Now, China is doing something similar, but in reverse. Instead of demonetizing silver, they are weaponizing it. They are restricting its flow to the rest of the world at precisely the moment when global demand is hitting all-time records. The Silver Institute just released their December 2025 report. Industrial demand hit 680.5 million ounces in 2024, a new record for the fourth consecutive year. The global supply deficit is estimated at 295 million ounces for 2025, the deepest on record. Let me put that in perspective so you understand the magnitude. The cumulative silver deficit since 2019 now exceeds 1.3 billion ounces. That is more than an entire year of global production that simply vanished from the market, gone, consumed, not coming back. Every major storage facility on the planet is draining. COMEX registered silver inventories have crashed more than 70% from their 2020 peak. London Metal Exchange stocks hit near all-time lows. Shanghai Futures Exchange inventories fell below 446 tons, the lowest since 2016. The irony is painful when you think about it. The U.S. just added silver to its critical minerals list in 2024. Silver is now officially a critical mineral for national security. But who controls the refineries? Who controls the processing infrastructure? China does. In October 2025, Chinese silver exports surged to 660 tons, the highest volume on record. They were draining their supplies to ease market tightness in London. But that window is closing fast. What happens when the restrictions take effect on January 1st? The current global silver shortage could double to over 5,000 tons annually. That is not speculation. That is basic mathematics. To understand why China is doing this, look at the technology. China plans to add 160 gigawatts of solar capacity in 2025 alone. That is 1,600 tons of silver just for domestic solar installation in a single year. Then add electric vehicles. China dominates global EV production, and each electric vehicle contains 25 to 50 grams of silver. The West outsourced its silver processing just like it outsourced its semiconductor fabrication. The bill is coming due. Some analysts argue alternatives exist. that copper can substitute for silver, but the reality is much harder. Silver has the highest electrical conductivity of any element. Substituting copper reduces efficiency. In high-performance applications like solar cells, that efficiency loss translates directly into lost output and lost competitiveness. Furthermore, supply is sticky. 75% of silver comes as a byproduct of mining other metals like copper, lead, or zinc. If a copper mine isn't profitable, it shuts down, and the silver stays in the ground. You cannot just turn up silver production. New mines take 5 to 8 years to develop. China knows this. They did the math years ago. That is why they are acting now. Let's look at the valuations. On December 24th, with gold at $4,500 and silver at $72, the gold-to-silver ratio sits at roughly 62 to 1. Historically, in extreme supply squeezes, this ratio compresses dramatically. In 1980, it hit 17 to 1. In 2011, it hit 30 to 1. If the ratio compresses to 30 to 1, reflecting severe supply constraints, silver would reach $150 per ounce. The pattern is called mean reversion. Extremes don't persist indefinitely. The crime of 1873 destabilized global finance for decades because supply conditions changed suddenly and markets took too long to recognize the new reality. Today's version of that pattern is unfolding right now. The export restrictions taking effect January 2026 are the trigger. The abundance was a lie. The scarcity is real. The question isn't whether silver will rise. The question is whether you will be holding paper contracts or the physical asset when the vaults officially run dry.